Hello, this is the TradeSite U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, the 13th of June, 2013, and ending Friday, the 17th of June, 2013. 16, sorry, 16. I say 13? 16. Hope you're having a good trading week. Here's a look at the ES front month futures contract. Again, we reached up to barely print new highs. There was no enthusiasm for it. And, of course, we rolled the futures contracts, the quarterly contract roll on Thursday going into Friday, which always basically dead stops the market once a quarter it happens. And in fact, we only gapped down Friday. That's the action intraday was very flat, as you'll see. So we'll go through that in a minute. But we've come back in after sweeping highs. And by the way, this negates that we were 4 bars into a startup phase. That's negated, as you can see right here if I go to projection mode. So at any rate, so nice inverted head and shoulders formation here we were talking about, but the trigger to break out of it didn't really lead us anywhere. Let's talk about everything that happened on Friday. So crude oil down to 49.07. That's down $1.47. Gold up $4.10. The S&P down 19.41. The NDX down 51.64. SOX down 11.88. That's finally a pullback after a nice strong breakout there. Biotech's down $61.98. VIX up $2.39 or 2.39. Look at that pink risk line. Look how solid that's been since that 13 buy signal. This is what's interesting here on the VIX. Now, this, any move up here would be the highest reading on the VIX since that signal. And yet the market, if you go back and look, like I said at the S&P, remember that signal was at the beginning of April. The market's actually right where it was then. So we never really rolled over, but this is interesting because the VIX is obviously a key signal for us. Trend 1.41 close. That's a pretty high close. 10-day moving average at 1.10. That is not a signal. Nasdaq volume was 1.67 billion on Friday. When you see the intraday action, you'll wonder how that was possible. Advanced decline ratio very negative on Friday, negative 1810 on the Nasdaq. That's one of the worst we've had. Boy, that's the worst since one day in February. And same thing on the New York. That's the down to negative 1871. That means 1,871 more stocks were down than up on the New York on Friday. Again, worse since February. Google lost $9.33. Obviously, that looks like a blip. Apple down 82 cents. Also looks like a blip. Amazon with that 13 sell signal 12 days or 7 days ago, down 9.74. Still under that risk line from that signal. Netflix down 3.34. And then the put call ratio closed 1.064. All right, so what does the intraday action look like? Remember, we rolled our contracts this week. This is very important. So you can see this is the 10-minute chart of the ES. So you can see basically the end of last week, and then Monday, Tuesday, Wednesday, Thursday, Friday. So this is the new contract that we're trading, the September contract. You can see the prices moved on Monday, Tuesday, Wednesday, but there was no volume. So this is a good way to look at what we've been talking about all week. You can still see what the market did. So Monday gapped up, pushed higher, pulled back, never filled the gap, closed closer to the highs of the day. Tuesday, small gap up, but it never filled. Got a 13 sell signal, exhaustion signal at the top, rolled over, never came back and quite filled, closed just under where we opened. Wednesday, another gap up that never filled. 3 days in a row, gapped up and never filled. That doesn't happen very often. It's usually a bad sign when that happens, by the way. And then Thursday, we gapped down, so that fills the gap from both Wednesday and Tuesday mornings. Came back up, tried to fill the gap, closed basically at the highs. Now notice the volume starts to move into the contract. There's a very small amount of volume on the September contract on Wednesday. Then on Thursday it starts to show up. And then on Friday, boom, everybody's trading that. And that's when all that happens, that the money rolls between those two contracts, but the technicals are off base for a while. And so they don't, they tend to not trade. The big players stay out on Friday. So Friday we gapped down pretty flat. There was a dip late in the day, and then we came back up a little bit. By the way, just to show you, now let's look at the ES. This is the June contract, okay, the one that's expiring this next week that we stopped trading. You see how the volume, obviously is drifting out of this. Look how by Friday, even the start of the day doesn't have the volume that you usually see. So there's still some volume in it because people still have the contracts, but by next week that's going to be basically gone. So the money has moved out of the June contract into the September contract. Here's the Nasdaq. This was impossibly flat Monday, Tuesday, Wednesday, and Thursday. I mean, look at that. I mean, the whole time basically in a 30-point range, Monday, Tuesday, Wednesday, Thursday. And then you get the gap down on Friday, dead flat until lunch, and again, the dip and back. I mean, this was a really boring week, folks. I don't know what to tell you. We said coming in it wasn't going to be great. Never is. Thursday and Friday of contract roll, never are very exciting days. So I hope we prepped you for that. Anybody that overtraded or traded too big a size, especially on Thursday and Friday, and paid the price, that's not what we teach at Trade Site. You should have known better. But Monday, Tuesday, Wednesday never really had a big day either in terms of trading activity. So hopefully that will pick up in the week ahead. All right, so let's take a look at exactly what data is coming out in the week ahead because there's quite a bit and there's a Fed meeting. So let's keep that in mind. Monday, there's actually nothing. Tuesday, import-export prices and retail sales an hour before the bell. Business inventory is 30 minutes in. That's all right. Might do something. Wednesday, we've got the MBA mortgage index, PPI, capacity utilization, industrial production, crude oil inventories. But Tuesday and Wednesday is a two-day Fed meeting, so the Fed announcement's at 2 p.m. Eastern time with 2 hours left. We'll see if we get our usual three-way phenomenon. I don't know that they're going to have anything super special to say, but it's always interesting to see if they have any give or take or give away any signs of what they're seeing in the economy, good or bad. That's what moves the market more than there's no expected rate hike, I don't think, at this point. And then CPI on Thursday. That's a big one. Obviously, it can be along with the weekly initial and continuing jobless claims numbers, the Philly Fed current account balance, and then 30 minutes in housing market index, and then an hour in natty gas. Friday, just housing starts and building permits. So there's some data this week. The Fed meeting is the big thing, obviously. Hopefully this is enough to get the market moving again. We're through the contract roll. And then the thing to keep in mind is with contract roll, the other thing you have this week, and the reason Friday will once again probably not be exciting, is this is options expiration week for June, and it is, because it's June, quarterly expiration. So that means options, futures, and commodities all expiring on Friday, which means that Wednesday or Thursday, we will likely see the options unraveling move. And remember, those are usually bigger on the quarterly triple expiration weeks, which this is. And then, of course, everybody's done by then. And on Friday, you're just closing out the positions to match off the options versus the stock pricing. And Friday is usually a dead, even though there's a bunch of volume. So if I'm going to look at this week and map it out, Monday, probably okay. Tuesday, maybe a little bit better, but then slows down because we go into Fed mode. Wednesday, we do have a lot of data early, but the big one's the Fed. So maybe with some movement early and then the Fed announcement. We'll see if we get that three-way phenomenon. I don't know if we get the options unraveling Wednesday when you have the Fed announcement Wednesday. So maybe the options unravel comes Thursday after the first hour. We'll be watching both Wednesday and Thursday. I think there's enough data Thursday to move the market around. And then Friday, probably a bust. But we'll see. So charts as usual, brought to you by eSignal 12. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. And boy, I'm looking forward to this week versus last week. Last week was just not that exciting. We are in the summer months. We'll see what that means. Everybody have a great trading week.